This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association. Your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman and Riley Smith. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Good day and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. We've got a busy day for you today. Riley Smith brings us another report from the high-level diplomatic discussions that were held last week in Des Moines between representatives of the U.S. and China. Also, we had the House Ag Committee in a hearing today about cattle transparency and breaking up the stranglehold that the big four processors have on the market. We'll also take a look at your ag weather outlook, but for now, let's take a look at the markets. It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. Well, we're at the end of the trading day for this Wednesday, and it's time to talk with Jim McCormick of agmarket.net. Jim, what did we see coming out of that trade today?
We saw some excitement, at least in the grains and the corn and the bean side of the equation. Dustin, the corn market July contract actually took out the previous high. A lot of volatility. There's three things I think that are driving the corn market right now. The first of it is weather. You look at the GFS midday model run, it continues to paint a lot of rain across the Midwest over the next week to 10 days. It's not going to be perfect planting conditions. There is some work getting done, but it's going to be slow pace, so the market's worried about that. Then we shift to South America. Brazil's safrinha corn crop is starting to trend lower. Estimates were around 113, 114 crop. Now you got people talking to 110. A few guys are going down to 108. That may be a little bit aggressive, but the fact is that crop's getting smaller. And then the last thing is yesterday, interesting enough, we had people rumored saying China said they were not interested in buying corn, which I found kind of comical. And then today the market's up and we're hearing China is actually now pricing corn. So I think that was the three things that are driving it. The China, I do believe, Dustin, will come in and buy corn. They bought about 6 million metric tons of corn from the Ukrainians. They cannot get that out due to the war, and I think they need that to supplement. They need our grain to supplement those lost bushels. Chinese corn contracts, September contract was just at the contract high just last week. So their food prices are high, just like U.S.
You know, and it's interesting you brought up Ukraine. You know, we've been talking about the port situation, and then they've been using the rails to get out a lot of their stuff, you know, to the EU and places beyond. But now Russia hit one of the main rail bridges, so that's really essentially almost locking that country completely out.
That's exactly what it's going to do. And if you hear what the Russian plans are, their goal right now is what their state is. They're going to try to control the southern part of the Ukraine, in essence, control all the ports. They're going to make that country a landlocked country, which is really going to make it hard to get product out of that situation. And that is what's got the world kind of nervous about it. You might notice the bean oil market continue to march higher today, and that helped pull the beans up, and that has to do with the tightness of the veg oil supply in the world. As you mentioned, you're bombing the Ukraine rail systems. They can't get the veg oil out. That essentially has driven the price of palm oil to astronomically high levels. That has Indonesia actually saying they're going to limit exports as they're trying to control food prices domestically, and hence driving our bean oil prices up, which drove the bean market up. So like I said, the tight food situation in the world, the inflationary aspect we're seeing looks like it's not going to go away anytime soon.
Now, obviously the U.S., big exporter, you know, of both soybeans and corn. And how long before we get in a situation where, hey, we're going to start, especially if we have a crop that's maybe below the USDA estimate of 181 this year on corn, you know, how long before we say, hey, we got to meet our own needs before we start worrying about everybody else's?
I think we've got what's going to happen is we'll get to the point where we just price ourselves out of the market. I do not see the U.S. government essentially limiting the amount of grain exports. I just don't see it do it. We overproduce, plain and simple. But what happens is you get a combination of the price of money going into the market, bullishness on the smaller crop, combined with the U.S. dollar. The U.S. dollar continues to march higher. It's at some of the highest prices we've seen in the last few years. If it takes out the near-term levels right around 105, it could march technically up to the highs made back in 2000, around 120. The higher that dollar goes, folks, the more expensive our product gets. So the combination of a higher dollar and potentially higher just prices domestically will essentially ration the demand. And then in the long run, it will bring supply back into the market because, as we know, the higher the prices go, the more you see suppliers around the world will ramp up production if they're able to.
Now, we also talked about China and whether or not they're going to be in the market, how much rationing, how much lockdown they're under. Obviously, China is a big player in the purchasing market, but what other markets are we seeing, movement in, or are we seeing any movement in other markets right now that are at least helping offset some of that, back and forth movement we're seeing from China?
Well, right now, the China is definitely the big thing. But let's look at the pork industry right now. The pork industry is kind of ramped up a lot. China was in a big buyer of a lot of U.S. pork back when they were having their swine flu problem. They've backed away from our pork, but Mexico has become a big buyer of our pork. So it's something we need to watch for that on the pork side. If you look at the hog industry right now, the chart looks really bad for the futures market. Hopefully the demand comes in. We'll see if tomorrow's export number is positive. But that's what you want to look at on that situation. But the reality is this, folks. China is the 800-pound gorilla in the commodity markets. They are the second largest economy in the world. They're one of the biggest consumers of commodities. So China goes, how China's pricing goes will have a huge impact on our pricing. But the reality is the world is very, very worried about food inflation and the prices going up to their domestic, supply. So I think that will keep China in our market buying both beans and corn. Right now, they may not be buying as many old crop beans, but we are hearing pricing for new crop beans already.
And of course, you mentioned that hogs aren't looking good. For the last couple of days, for lack of better metaphor, they've been getting whipped like the family pig. How did hogs do today, and how did cattle do?
Well, the hogs came down there. They were down under pressure. They're kind of, they got what's forming a head and shoulder top on the chart pattern. So that's definitely a little bit negative, but they did hold, I believe it was the 100-day moving average on the front month June hog. So I think that's hopefully a good sign. Technically, this market can get a bit of bounce. The cattle market's just kind of chopping around here. It doesn't like the higher priced corn, but it's the same thing for the cattle market. Like I've been saying, folks, I am still a little bit optimistic on the beef demand for the United States. I know inflation is high. I know the price of beef is high, but the reality is after 2 years of staying at home, a lot of people are going on vacation this summer. Hotels are full. If you look at booking reservations for restaurants, we're back to pre-pandemic levels. If anybody's booked airfare recently, they realize airfare is through the roof. And hopefully that is a good sign that we will see demand for the beef complex as well as the hogs. The other thing I think would just help just locally would be warmer weather. It's been very cold here in Chicago. It's in the mid 30s. We are going to warm up by the weekend, but only in the upper 50s. We need to see that 60, 70-degree temps to get the people out there getting that grill going. Mother's Day is coming around the corner in May. Hopefully that's also a good sign for demand.
Now, I'm going to ask one more question, Jim. We've talked a couple times about obviously the livestock and what hogs have been going through. You keep mentioning the term head and shoulders. Could you explain to some of our listeners that maybe aren't as familiar with some of that terminology what that means?
Well, what it means pretty much is a charting pattern where you essentially had a surge in the market, went up, then it failed back. Then you had another surge that took out that previous high, pulled back, when that'd be your head. And then you made a third pattern surge higher, which would be your other shoulder. So if you can visualize me sitting here, it's kind of my left shoulder, head, and right shoulder. And essentially the market tried 3 different times to rally. It failed at it. You start taking out the lower end of those ranges. What happens is that projects a downward swing from the high to the neckline to the head, and that projects a negative pattern. So we're at levels that are very critically, technically, to hold. If you take out this neckline like we did in this last kind of line of support to 100-day, that technically would be a very negative sign for the hogs. So that's what we're looking on the technical side. Now we'll see on the fundamental side if we can get some demand. If you can get China to come in and buy some of these hogs, or Mexico, hopefully the fundamental story will trump the negative chart action.
All right. Well, hopefully we'll get that weather to turn around so we can start getting some of that crop planted here in Iowa, and Jim can get some grill going at the McCormick household.
No doubt about it. Like I said, we do have some people planting right now. I actually talked to a customer in Central Illinois. He is running today. So it is not like everyone's not going, but the reality is we are behind. There is more rain in the forecast. And I think, as we get into May, the market will start getting more concerned if we're not past that halfway point relatively quick. So it's something we need to moderate, keep an eye on every day.
All right, Jim. Well, a lot of great information as always. If folks want to get in touch with you guys at agmarket.net to talk some strategies, how do they do that?
You can reach me directly at 815-665-0461, or reach any of the Ag Market team members at 844-424-6758, or reach us at agmarket.net to download our research.
All right. Well, thanks, Jim, for the insight as always. We'll talk to you again real soon.
Thank you for having me on.
That again was Jim McCormick of agmarket.net here on your Ag Market Recap. Let's run through those closing numbers courtesy of the folks at Bar Chart. July corn up 10 3/4 at 8.12 and a quarter. December new crop up 6 at 7.49 and a half. July beans up 21 at 16.92 and 3/4. November up 22 at 15.24 and 3/4. July meal up $4 at 4.41 even. Soy oil up $2.28 at 84.72. July Chicago wheat down 3 3/4 at 10.91 and a quarter. Minneapolis wheat up 6 3/4 at 11.94 and 3/4. Kansas wheat down 10 1/2 at 11.54. Oats down 27 3/4 at 6.66 and a quarter. On the livestock side, June live cattle were down $1.22 at 135.02. May feeders down $3.37 at 157.35. June lean hogs 82 cents lower at 110.35. Pork cutouts 50 cents lower at 117. And April class 3 milk down a penny at 24.30. And that's been a check of the Ag Market Recap here on Ag Matters PM. We're going to take a quick break, hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. And then when we come back, Riley Smith will be joining us from the World Food Prize Hall of Laureates again as we hear more on the diplomatic discussions that were held last week between the United States and China. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AM/PM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. If you've been watching the last few episodes, you know that there were some high-end diplomatic discussions that were happening at the World Food Prize Hall of Laureates in Des Moines between the U.S. and China. Riley Smith has brought us different aspects of these discussions, and he files this report for today.
If there was one takeaway from last week's U.S.-China high-level agricultural dialogue, it's that the relationship between the two countries is among the most important for both sides. Speaking virtually from his station overseas, U.S. Ambassador to China Nicholas Burns talked about how the connection is so integral that both Republicans and Democrats here in the U.S. agree to make it a priority.
First, let me talk about the U.S.-China relationship. I think all of us know, whether we're American or whether we're Chinese, that our relationship is going to be the most consequential for the rest of the 21st century. It's the most important bilateral relationship that the United States has anywhere in the world. We're the two largest economies in the world. We're the two most powerful countries in the world in every respect, and therefore we have a responsibility together for global peace and global stability. I can tell you that President Biden has made the U.S.-China relationship a priority, and I'm very proud to represent him and proud to represent the American people here in the People's Republic of China. We do benefit in the United States from something unusual. We have a bipartisan agreement among Republicans and Democrats in Washington, and I think across the United States, on the importance of China and on the importance of this relationship.
While there is agreement that this relationship is important on both sides, it's not always a rosy friendship. Burns offered an honest look at the relationship between the U.S. and China, saying that both countries need to work past the competitiveness and try to cooperate.
We want to be honest tonight. We also have to admit, both of us, both sides, that we have a complicated relationship. And it is in many ways a competitive relationship. We're competing on economic issues, on trade issues, on technology issues, and on issues pertaining, certainly from our perspective, to American national security. We also have significant differences about the way that we structure ourselves. We Americans believe very deeply in our core values. We believe in freedom of religion. We believe in freedom of speech. We believe in freedom of assembly. We believe in freedom of the press. We believe in the rule of law. And we deeply believe in human rights. And so we're going to have to learn how to compete with each other on all of these issues. But of course, we also have to engage each other in cooperation, and we're doing that in agriculture. We have a great leader in Washington, in President Biden, and we have in his cabinet Secretary Tom Vilsack, one of the most experienced people in our country on the issue of agriculture, his second time serving as secretary. I'm so impressed by him, and I know that he's providing strong visionary leadership for the United States in terms of our agriculture trade around the world, but especially with the People's Republic of China.
Recently, we've seen more of that cooperation, most evidently in the record-setting exports from a few weeks ago. Burns said the Biden administration is committed to improving and maintaining that cooperative relationship with China.
I think all of you know in the hall tonight that the United States exported a record $38 billion to China in 2021, making this the #1 market for U.S. agriculture. That equates to 20% of total U.S. agricultural exports. So this is a very important relationship with us. And this trade is making a real and positive difference to our rural communities across Iowa, across the Midwest, across the United States, in our farm and ranch states. Over the past 4 decades, U.S. farmers, ranchers, and industry have exported successfully to the People's Republic of China. We want that to continue, and we expect it to continue. I can tell you, because Ambassador Branstad advised me to make this a priority, I'm certainly making it a priority here as our ambassador at the American Embassy in Beijing, and we have consulate generals in Shanghai, and Guangzhou, and Wuhan, and Shenyang. We have a great agricultural staff here led by our Minister Counselor, Bobby Ritchie, who, by the way, spent some time in Iowa State and is grateful for that part of his education. So agriculture is going to be a priority for me, as it is for our President, as it is for Secretary Vilsack. And maintaining a constructive relationship on agriculture with the People's Republic is going to be very important for the overall bilateral relationship.
Of course, it takes cooperation from both sides to maintain this international relationship. Burns highlighted some of the promises they need China to uphold.
To do that, to accomplish that, it's also important that the People's Republic of China follow through on the commitments that it has made to our government, to our farmers, and to our ranchers. Consistency, accountability, and transparency are going to be critical. The U.S. farmer and the U.S. rancher want to be reliable suppliers of high-quality, safe food and agricultural products to people all over China. But the People's Republic government must address a range of long-standing problems that important agricultural issues. Let me give you one example. The government here in Beijing should implement a timely and predictable approval process for agricultural biotechnology. And there are other examples that remain unresolved, which have been highlighted by the Biden administration. If these important commitments are fully implemented, fully realized, that would go a very long way to support the ambitions of our farmers and our ranchers for continued very strong agricultural trade with China.
It also happened to be Earth Day in China as the event was going on, so Burns closed with some comments on the commitments of both the U.S. and China to sustainable agriculture.
I can tell you that Secretary Vilsack knows a lot about China. He's built solid relationships here, including at the ministerial level. And we also know that as part of this future of American agriculture, and Ambassador Shingan mentioned this, we have to be working together on clean technologies and sustainable agriculture. This dialogue is being held on Earth Day here in China, and I know that our special presidential envoy for climate change, former Secretary John Kerry, is working very hard with his Chinese colleagues to make sure that both of our countries and the rest of the world are making good on the commitments that we made at the Paris conference and more recently last autumn at the Glasgow conference. So the steps that we take together on climate change are going to be very important for the future of agriculture in both of our countries and around the world.
We'll have more coverage of that event in another episode of AM/PM. For the Iowa Agribusiness Radio Network, I'm Riley Smith.
Thanks, Riley. And now let's take a look at your ag weather outlook. Well, we did see the sunshine finally return here to Des Moines, but the clouds are still starting to roll back in. It's been kind of back and forth here, give and take between the clouds and the sun. There is a chance of more rain rolling back in. We'll have to take a look at what the National Weather Service has in store for us in the next 24 hours. Well, looking at today, we did see clouds rolling in across the state. Some areas had less than others, and that's just the way it ranged. We saw highs anywhere from the mid-50s to the upper 70s. Now, tonight, clouds are going to roll back in throughout the evening across the state. There are chances of showers and thunderstorms all over the place, and we're going to have temperatures anywhere from the mid-30s to the mid-50s. Tomorrow, those chances of showers and thunderstorms continue across the state. Check local listings for what your percentage is. We'll see highs anywhere from the mid-50s to the upper 60s. Taking a look at the affiliate weather map for tomorrow, as we said, Cherokee is going to see some thunderstorm activity and a high of 61. Shenandoah, a chance of rain in 68. Des Moines, a mixture of showers and thunderstorms and a high of 62. Albia looking for thunderstorms and a high of 59. Waterloo going to look at some shower activity in 54. Clinton look for some showers and thunderstorms and a high of 56. Well, that's been a check of your ag weather outlook. When we come back after this short break, there was a hearing on the House Ag Committee today about the cattle transparency bills that are moving through, and we heard some interesting back and forth discussion on both sides of the argument. This is Ag Matters PM.
As we approach planting season, make sure you stay safe and share the road with your local farmers. Slow-moving tractors with large planters occupy a lot of space on the road, so stay patient and follow at a distance of around 50 feet. You should never, ever try to pass them at a bridge, intersection, hill, or curve. It's far better than putting yourself or someone else at risk. So please, stay safe and remember to tip your hat to your local farmer this planting season. This message was brought to you by your friends at the Iowa Agribusiness Radio Network.
Welcome back to AM/PM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Today, the House Ag Committee held a hearing about cattle pricing transparency and what the situation is for farmers on both sides of the argument. Missouri farmer Coy Young was the first to testify in front of the committee, and he talked about some of the pains that family farmers like him are having to face.
For years, the packing industry has been concentrating more and more with fewer, larger mega plants to process our proteins. The American cattle farmers and ranchers are tired of being taken advantage of and losing money year after year while watching the Big Four post record profits every single quarter. The packers have manipulated the system with their alternative marketing agreements or arrangements, which was forming on captive supply, with the huge corporate-owned feed yards that control 87% of the fed beef in this country. AMAs have killed the cash market and competition within the beef industry, making the markets the cow-calf producers have to compete in so depressed for the times. Bankruptcy rates continue to be on the rise, and we're at a 10-year high in 2019. The Packers and Stockyards Act of 1921 was put in place to protect the cattle farmers and ranchers from the very thing that's happening within the beef industry today. I ask, why are we not enforcing the Packers and Stockyards Act? Is everyone washing on the payroll of the Big Four to let them continue their free reign without consequence? AMAs are legalized market manipulation practices that should not be allowed and enforced under the Packers and Stockyards Act of 1921. There's an alarming number. The number is 40.27 cattle farms that call it quits every single day in this country for the past 3 decades because they can no longer make ends meet. Alone, that should grab the attention of leaders in Washington that there is a problem going on here. Family legacies and century farms are being ripped out of their hands, and families are losing their loved ones from an unprecedented amount of suicides. Farming and ranching has the most suicides in any industry due to stress, a shrinking bottom line, and that's fueled by the greed and capitalistic nature that's everyday business in the Big Four that are in question here today. There's blood on the hands of the Packers and leaders in Washington, and no one seems to care.
NCBA President Don Schiefelbein also addressed the committee. He talked about the more pressing needs that need to be addressed rather than the Packers, and that includes supply chain issues, slaughter capacity, and also worker shortages. He said while we need to address any monopolies that could exist among the Big Four, he said that the Department of Justice was supposed to have handled that a long time ago. In fact, they've been working on it for almost 2 years.
It has been said many times over, the cattle industry is home to the most complex markets on earth. The intricacies of this system have been highly scrutinized over the past years, but the fundamental dynamics at play have been consistent through times of plenty and hardship. Let me be clear. Cattle producers know best what they do and do not need to do in order to be successful. I implore you to listen to what producers are telling you. The hearing focuses on meat packers. We share the committee's concern about the consolidation, but we would have preferred to discuss a host of more pressing challenges with you today. Make no mistake, curbing rampant inflation and skyrocketing input costs, addressing urgent labor shortages, and increasing market transparencies are the true immediate needs of producers. I urge you, do not let today's proceedings disguise that fact. Producer leverage with packers has been a hot topic over a century. However, of greatest concern to NCBA is the current shortage of adequate beef packing capacity, not seen in several decades. NCBA has supported measures both in Congress and with the Biden administration to increase packer capacity. Most importantly, we have continued to advocate for those new facilities to be small, regionally focused small businesses. Following both the Holcomb fire and COVID-19, packer capacity loss has resulted in the highest recorded spreads between box beef and live cattle, $67.17 per hundredweight and $279 per hundredweight respectively. This behavior is rooted in basic laws of supply and demand, but given the magnitude of these price disparities, it would have been imprudent not to further scrutinize the packers. That is precisely why NCBA called upon the Department of Justice to investigate the 4 major packers. The results of this investigation have yet to be released, but I urge Congress to proceed carefully as we await the findings. I ask that you continue to engage with the Attorney General as he continues this investigation and hold off on crafting new legislation until a determination has been made. NCBA strongly supports robust enforcement of the Packers and Stockyards Act and believes the Department of Agriculture has adequate legal authority to enforce it properly. We support the Biden administration's effort to streamline collaboration between the Packers and Stockyards Division and the Justice Department. But we do not believe creating a new office with the USDA is the proper way to enhance enforcement. Briefly, I would like to address the Cattle Price Discovery and Transparency Act, Senate Bill 4030 and its House companion, H.R. 5992. NCPA opposes this legislation. Freedom to market matters. It has allowed cattle producers like myself to respond directly to consumer needs. If the government were to erode this freedom or completely take it away, everyone suffers.
Schiefelbein also talked about innovation being the driving force in agriculture, saying that his large family operation that goes from his father's generation to himself and his brothers to his daughters has stayed in business a long time because, as his dad would say, they don't do it the way he used to do it.
Again, it's the role of government as I see it. When people are in desperate need, that's when government comes in and provides them a safety net. Right. What you've done with the drought assistance is superb, and the immediacy that you provided that here just in the last week, I can't tell you how many phone calls I received saying, thank you very much. You're probably clearly aware that there's a portion of our country that is still suffering the drought, but there's also a portion just north of you, Congressman Johnson, that is dealing with a horrible blizzard. If you have not seen the photos of what these producers are experiencing, you need to get hold of them and see. And to me, providing that safety net is really a critical function of government when Mother Nature or things of underneath your own control cannot be managed. You mentioned it just a moment ago, and I think it's important for the whole committee to hear this. Innovation is the engine that drives agriculture. Drive across this country, go to any other foreign country, and you'll see the manner in which we adopt innovation and make things better is really what drives our competitiveness. My father, who Congresswoman Fischbach mentioned, Big Frank, he gets asked a lot of questions. He says, how does your family succeed in a family of that many members, yet how can you be successful? His quote that he is quoted on saying, and I think it's a lesson everybody could learn. My dad's quote is, the reason our family is successful is because we don't raise cattle the way I used to. And I want you to absorb that just for a moment. That is critical, and it plays exactly into AMAs and new ways of doing business and new ways of marketing. We've got to evolve, and you've got to allow innovation to enter your business.
So the committee heard testimony both for going after the Packers and let's put the brakes on it just a little bit. It's definitely made for some interesting conversations on the Hill today. Chairman Scott of the House Ag Committee said that by the time he was getting done, it was starting to seem more like inflation is what's for dinner rather than beef. And just like that, we've come to the end of Ag Matters PM from the Iowa Agribusiness Radio Network. You can find all our content online at iowaagnet.com. You can also follow us through Facebook, Twitter, Instagram, LinkedIn, and find our video products as well as previous episodes of AM PM on our YouTube channel. You can also get our free Twice Daily Market podcast through Amazon, Apple, Google, Podbean, and Spotify. From the IRN studios in Des Moines, I'm Dustin Huffman, and for Riley Smith, we thank you for joining us. This has been Ag Matters PM.